In this TradeMiner video, I want to talk about how we can use TradeMiner when day trading. Day trading is very popular, especially in the Forex market. So I want to show you how I like to use TradeMiner when day trading. In this example, I'm going to be using the Forex version, but of course, you can do this with any of the three versions, stocks, futures, or Forex. For me, when I'm day trading, I want to have an underlying bias of the overall market itself. I want to know whether the market is going to have a tendency to rise in price during the day or fall in price during the day, or during my time frame of trading. Most times I'm trading the Forex market in a 30 or 60-minute chart. Therefore, even though it's called day trading, I'm trading even a longer term time frame, generally a week or sometimes even more. Here's how I set up TradeMiner for day trading. Let's start with step 1 and prospect for trades in the month of, again, let's say that we want to look at January. We want trades, and I'll turn this down to 75, and let's do both longs and shorts. Then I'll list trades that last at least, and I'll put in here 2 trading days, and I'll put 7 trading days in here. So we're covering 1 calendar week. And let's mine at least, and let's start looking back here. Let's go back at least 8 years of history. If we don't get enough results, we can drop this down to 6 or 7 years. Now I'm going to turn off the same symbol duplicate start dates and the overlapping trade dates. When we do this, we get a nice list of the different instruments, the different currency pairs. We can then scroll down through the list and find the best trading opportunities for any given week. For example, let's just take a look at the very first one here in the list. This is USD CAD, which is the Canadian dollar, and basically we can figure that between January 10th through the 20th to the 2nd, or maybe to the 22nd, that this market will most likely be in an overall bullish trend. That will be our fundamental bias when trading this market during this time frame, because as you can see, over the past 12 years, 75% of the time, this market has been bullish during this time frame. Does this mean that it's going to happen again this year and always and forevermore? Of course not. But this gives us a directional bias that we can then take into consideration when trading the Canadian dollar during this time frame. Actually, this trade has already passed us by, so let's jump over to track and trade just for fun and quickly see how this market did this year. Here's the Canadian dollar during our TradeMiner time frame, and as you can see, it did it again this year. So it was in an overall strong bullish trend, just as TradeMiner said it would be. So how do I use this information? What do I do? As I'm contemplating my day trades, I'll always have in the back of my mind that this market has a strong tendency to be bullish during this time frame. But what if I get a sell signal from my favorite indicator? What do? Well, I'll either take a very cautious short position, or maybe I won't take a short position at all. But if I get a buy signal from my favorite indicator during this time frame, then I'll have the confidence to be a bit more aggressive in my trading decision. The great thing about day trading with TradeMiner is that it can help give you that additional confidence you're looking for when making a trade. And that's how we use TradeMiner when day trading.